Hey everybody, it's me Myra at Down Home Money, a simple approach to financial freedom. I hope you're doing well. It's Tuesday, it's my day, and I'm excited to bring with you what's going on in the market. Is it a crash? Is it hot? Is it cooling down? What's going on in our market? You got to see this. All right, so I'm here today to share with you what the heck's going on in the market. And I'm hoping that a lot of my real estate agents are watching this video because it's really important for you to know what is happening in the market so that you can advise your client. Because I'm going to tell you what happened to me this weekend because I think it's important to share this. And this is a situation where the realtor cost her seller a full price offer, close in a week. All right, so here's what happened. I put in an offer on a house. Y'all know I buy real estate. I buy stock. I'm dividend investing, but real estate is my jam. I mean, I've been in real estate for 30 years. I saw a house come on the market. I really love this neighborhood. I love the house. I put in an offer. Didn't hear from the agent. I called her. I texted her. I emailed. Nothing. Several hours goes by. She sends me an email and lets me know that her seller has to find out from her mom, who lives in Europe or lives out of the country, if she can do it or not, or whatever. Okay? So it's going to be several days. So I already know red flags go up. You're playing me, trying to get multiple offers. That's fine. If you're doing this for your client, then you know what? I get it. The seller's in control, and a lot of people don't understand that, but a seller is in control, and this has been a seller's market. But don't worry, guys. We're moving to a buyer's market. I'm already seeing all the price reductions. Everything is lining up to go back to a buyer's market. And here, even more importantly, why I wanted to share this. This is why you need a great realtor. Because here's the deal. In the last 3 years, if you could fog a mirror, you could sell real estate because there was so much business and just so much, it was craziness. And you didn't necessarily have to be a professional. You didn't have to return my call if I was representing the buyer because you didn't care because you had so many offers. But let me tell you what happens when the market shifts and it becomes a buyer's market and you've got a listing that's been sitting on the market forever. Then you have to learn some skills for calling the other agents and building a relationship because relationships matter. Kindness and being a source of information about the house matters. If I'm representing buyers, and I did a lot of buyer representation in the market when it was a buyer's market, and I love the agents that were calling me back, that were returning my texts, that were grateful and appreciative and taking care of business. And we've had a little lack of that in the last few years because real estate, quite frankly, has been easy. And now is a new day. So what happened? That was her response to me. Then I didn't hear anything else, and I knew she was, I knew it was showing, the house was showing. She was looking for more offers to work the offers. But then 3 other houses popped up on the market in the same neighborhood. And so I told them if I didn't have a response by 5 p.m., I would respectfully rescind my offer. So what does she do? She still does not pick up the phone. She texts me, and she texts me saying, so Rick and I already felt like we might be paying too much for this house, right? Meanwhile, she's giving me too much time to think about it. Realtors, what you don't know is people are still researching, and especially if it's an investor. I don't want to overpay. I'm an investor. I know real estate. There's going to be another one come up anytime. So she gave us a lot of time to think about it. And I started studying the market and studying rents and studying everything like I should have done before I put the offer in. But I buy and hold, so I know I'm going to be in the money no matter what. If you buy and hold, it's kind of like stocks. You're going to be fine. So I buy in all markets, right? Because I buy and hold. And so anyway, I started studying the market and I was like, yeah, not so much. If she counters us in the least bit and doesn't just sign the offer, we're going to move on. That's what the decision Rick and I had made. So what does she do? she counters my full price offer for us to pay the title policy. Okay, so we rescinded our offer and the property's sitting on the market. Our offer was to close in a week. That seller has vacated the house, already bought another house, already moved out of state, had a full price cash offer to close in a week. Her agent didn't do her justice. So agents, we're going into a new market. Learn the market. I'm gonna show you what's going on in the market in the areas I represent, or I have a lot of viewers that represent, and I hope this information will help you. So if you're a real estate agent, you need to watch this video because you need to know the market. You don't need to just be showing houses and watching MLS, because I know we get so busy. Listen, I've done your job. I've done it at a really high level, selling over 100 homes a year by myself. So I get it. You get so busy that you're busy doing all the things that you don't really take the time to study the market so you can be the best. And I don't know about you, but I want to be the best. And I want to always represent my clients and always protect their largest asset, because that's what real estate is. And when you are listing homes or you're helping people buy their first home, you're helping them with their largest asset. And it's crucial that we do that. We do just that. We protect them. All right, let's get started. Let me share with you what's going on in the market, because Zillow says that the housing crash is happening way faster than they thought. And now they're saying that in some areas, especially in the California market, I mean, the declining home values are happening, especially in these markets. These are the top 5 markets that the declining housing market's happening in. San Jose, California is down 8.6% since May. Austin, Texas is down 6.1% since May. Boulder, Colorado is number 3. It's down 4.9%. San Diego's down 4.7%. And Salt Lake City, Utah is down 4.6%. So a lot of markets are starting to decline. That's why it's important you know what's going on. Zillow states the housing market is quickly rebalancing from what have been arguably the strongest sellers market in decades. And of course, we all know that. And we know that real estate is extremely local. And there's some pockets within a city that could be declining. There could be a neighborhood that is still going up in price. But that's why you have to become the expert and learn your area. Just to give you kind of an idea for me, our contract's written at my own franchise. So just because I have like a bird's eye view, right? And I'm looking at all of this in different areas. But our year-to-date contracts written are down 8.8%. And our average sales price is up 15%. So, listings taken are down 0.6% year-to-date. Let's see, listings taken are down 26.4% month over month. So from July of last year to July of this year, we're down 26% on listings taken. So remember, because how inventory is and supply and demand, that is causing that some markets aren't really decreasing yet because they don't have the listings. They've got still more buyers. But buyers are slowing down because of interest rates. So then there's so many different factors that go into all this that you have to look at the big picture and the certain area that you're in, because demand is down. Demand is back to 2011 demand, okay? So even though inventory is down, but yet demand is down to 2011. Our inventory is not back to 2019 levels, but demand is down to 2011. So you've got to know really what's going on. So, and the buyers will come back, but buyers are waiting because the buyers feel like between the interest rates and the demand being down, they're waiting because they got tired of all the multiple offer situation. Cash buyers are backing out when it becomes a multiple offer situation. So I just thought I would share all this with you because I think it's important. So let's talk about the different cities that I know what's going on, and let me share with you where they're at. So let's start with my area, Cincinnati, Ohio, Kentucky. I'm in that tri-state area, so I have an Indiana license because they all touch. And I am right there in Florence, Kentucky, which is right there on the river, which Cincinnati is across the river, and then you've got Indiana. So let's talk about that. So Realtor.com did a study, and it is the top 300 metros, and it's a hotness rating. The higher you are to 100, the hotter your market is. The lower is the coolest market where the demand is cooled. So let's get started. In my area, out of the 300, Kentucky, Ohio, Indiana, and the Cincinnati market is slightly hot. We're number 47 metro. Hotness index is 68.56. Cincinnati, Ohio, Kentucky is ranked number 47 of the 300 metros. We're slightly hot market that is heating up compared to last month and heating up compared to last year. Median days on the market is 29 days, with inventory moving 5% faster than last year and 6 days faster than the U.S. overall. Properties in this area received an average number of views 1.1 times higher than the U.S. average on Realtor.com. Next market, let's talk about Houston and Woodlands, Texas. It's number 272 out of 300, and the hotness meter is 22.41, so it's slightly cool. Its days on the market now are at 35 days on the market. It's 3% faster than last year and 0% faster than the U.S. overall. Properties in the area received an average number of 0.2 times lower than U.S. looking on Realtor.com. Let's go to Louisville, Kentucky, Jefferson, Indiana. You are number 34 out of 300. You are slightly hot with a 72.74 rating. You are, days on the market is 25 days on the market. Your inventory is moving 9% slower than last year, 10 days faster than the U.S. overall though. And you're showing up on Realtor.com views 1 time higher than the U.S. average. Let's go to Lexington, Kentucky. Lexington, sorry guys, y'all are number 248 and you're slightly cool. You are 29.43 on the hotness index, and you have 41 days on the market, but your inventory is moving 13% faster than last year and 6 days slower than the U.S. overall, and you're 0.8 times lower than you were last year on views on Realtor.com. Let's go to Indianapolis, Indiana, and Carmel, and Anderson. You are warm. You are 149 of the 300 metros. Your hotness index is 49. And you are, days on the market, 32 days on the market, with inventory moving 10% faster than last year, 3 days faster than the U.S. overall, and properties in the area received an average number of views 0.8 times lower than the U.S. average. Let's go to Columbus, Ohio. Hot! Woo! Columbus, number 14 out of 300. You're 87.29 on hotness index. I love this market. I love Columbus. I have a lot of great friends in Columbus. You are 22 days on the market. Your inventory, though, is moving. This is interesting. Your inventory, though you have the hotness, your inventory is moving 33% slower than last year and 13 days faster than the U.S. is. You are having views 1.4 times higher than any other city on in the U.S. So congratulations, Columbus. Congratulations. Dallas, Fort Worth. Okay, guys, this is my market. I'm in the Denton market, 30 minutes north of Dallas, but it's included in this, and Arlington is included. So Dallas, Fort Worth, Arlington. Out of 300, we're number 138. We're a warm market. We are seeing more inventory. We are seeing more days on the market. We, over 400,000, are seeing price decreases like crazy right now. So here's why. Ranking 138 out of 300. We have days on the market, median days on the market is 29. Our inventory is moving faster, 2% faster than last year, 6% faster than the U.S. overall, and our views are 0.7 lower than the U.S. Next market is Florida. Let's go to Florida, my favorite place. Fort Walton, Destin. All my Kentucky friends all vacation there. So if you're looking to buy a house, the market's starting to cool. It's 273 out of 300 metros, so it's slightly cooler. The hotness index is 22.41. The days on the market, median days, are 43, with inventory moving 56% slower than last year and 8 days slower than the US. Properties in this area received an average number of views 0.8 times lower than the US average. Let's go to PCB. Y'all know I sold 3 properties there last year. I'll put a link on that. Doubled my money. This market has cooled. It is number 284 metro out of 300. The hotness index is 15.22, so it's cool. The median days on the market are 43, with inventory moving 34% slower than last year and 8 days slower than the US overall. Properties in this area with an average number of average number of views 0.6 times lower than the US average. So it's not as hot as it was, it's cooled down. This market is for my friend Brenda. Brenda, shout out. Charlotte, North Carolina is number 177. It is a warm market. It's 44.82 in the hotness index. The median days on the market for Charlotte is 33 days. Inventory is 20% slower. Inventory is moving 20% slower than last year, 2 days faster than the US market. But properties in the area received an average number of views 0.8 times slower than the US average. So as you can see, people, we're coming into a buyer's market. Are you ready? Because I will tell you, it's going to be time to start buying again. The market is slowing down faster than we thought, and that's probably because of the increase of interest rates. We're going to have another increase probably in September. Will it be 0.5? Will it be 0.75? We'll keep you informed. You know, we do these videos every week, whether we're talking about housing, dividend investing, real estate. We talk about it all. Money, just a simple approach to financial freedom, because I truly believe that everyone can have financial freedom. It's not about how much money you make, it's how much money you keep, and are you buying assets to throw you off a passive income. I can't wait to see you next week. Be sure to go to downhomemoney.com, sign up for my monthly newsletter. I won't bombard you, I promise. Get my monthly newsletter. Just like once a week I do videos here, once a month I send you a monthly newsletter just telling you what's going on, the month in review. I'll see you next week. Thank you so much. Be sure and give us a thumbs up and forward this to your friends that are realtors on what's going on so they can help their clients. I'll see you next week.